More bad news for Yes Bank, the top loser in trade yesterday after Moody's ICRA 2 has downgraded the lender's credit rating, citing corporate governance concerns. Let's discuss the rationale behind the move with Anil Gupta, Vice President at ICRA. Anil, good having you. Thanks much for joining in. Not only have you downgraded the ratings, you've also warned of further cuts on adverse developments. The rationale behind the downgrade, and what is it that you would look out for within Yes Bank's stable that could lead you to further cut the ratings?
Yeah, hi, good morning. So I'd like to update the issuers that we had earlier placed the rating on negative watch around 10 to 12 days back. And subsequent to that rating action, there have been incremental resignations from the board, which talks about not that the director was not happy with the way the board matters were conducted. So basically, that actually raised some concerns on the practices of the corporate governance at the bank. So that was one of the reasons that we have cut the rating incrementally after we have placed the rating on negative watch. And the initial rating watch and the current rating watch basically is driven by the weakened ability of the bank to raise capital, because our rating is always factored in that the bank has a strong ability to raise the capital. And as per our expectations, the bank was due for a capital raise in fourth quarter of 2000 financial year 19. So definitely, as per the current scenario, we don't expect that capital raising will be possible by the end of the fourth quarter, and it may get maybe there is an uncertainty to that extent. And in the meanwhile, what has happened is that the banks, because of its growth, they have consumed their capital, and the capital cushions have weakened. So broadly, this is one of the reasons that the rating has been placed on the negative outlook, that the ability to raise capital has weakened for the banks. Apart from that, we are also concerned on the divergences and the serious note which has been taken by RBI for these divergences. And in case the divergences were to reoccur for the March 18, then possibly we will have to relook at the rating. That can lead to a further downgrade, because in case the asset quality deteriorates upon the outcome of divergences, that can also lead to a rating downgrade.
So is asset quality the only criteria that you're going to be on the watch out for further downgrades, or the other operational matrices will also be watched out for? Because I believe, a deposit base seems to be stable for the bank.
Yes, so that is the good thing, that the deposit base has remained stable for the bank among all these events which are happening. So that is a positive thing, but because again there is a significant reliance on the wholesale funding for the bank, so we need to watch out for the deposit levels and the liquidity for the bank. So though we don't expect that should be an issue in the near term, and because the bank is expected to finalize the new MD and CEO, so the operations at the bank should stabilize. So we'll look forward to, as soon as the situation stabilizes and there is no challenge in terms of deposits and the liquidity. But in case there is some issues which emerge, then definitely that will be a rating sensitivity. Apart from that, if you look at, we have also mentioned that the asset quality divergences which can lead to a deterioration in asset quality, that will continue to remain a sensitivity for a downgrade.
All right, got that. Mr. Gupta, thanks very much for those quick comments with regards to why they've actually gone ahead and downgraded the long-term debt ratings for some of Yes Bank's paper.